Bitcoin is back. It is September and we are off the lows already. Gold and silver stealing the show into this month. Gold pumping to all-time highs. Silver begging the question, is it going to pump next? Is it going to pump to all-time highs next? Interesting conditions as job numbers came out this morning. Weaker than expected, weaker than forecasted, showing weakness in the job market. Another encouraging factor for the Fed to cut in September, and markets so far seem to be enjoying it. Definitely some concerns on the interest rate cut front. Last time interest rates were cut in November of last year, 30-year rates went up. It's likely to happen again. And what's interesting is the rates might not bring what we want them to bring. We may see rates increase. Remember, the Fed only controls the early or the short-term rates. They don't control the far-out rates. That's up to the market. And the market is not convinced that rates should come down quite yet. So we're going to get into Bitcoin. We're off September's low. Not a lot of movement yet, but something tells me this month is going to be volatile. So do me a favor, smash the likes, subscribe, share with a friend, chat, join the Discord, sign up with our sponsors and links in the video description below, and let's get into that content, baby. Thanks for being here. Getting that volume right. There we go. DJ Crown. When nothing else is happening, what do? We DJ, baby. That's right. Spinning those 4-year-old EDM mixes. And I might as well give credit. Let me throw this up here. I'm sick of people not giving credit on the internet. We've listened to this mix before. It's a good one. It is by Kiffin Beats. It's actually 4 years old. It's got millions of views. Lo-fi house, vibing. So check out Kiffin Beats if you want more. I don't know actually if he makes new music. Maybe he does, maybe he doesn't. We've got some new subscribers already, and we also have more viewers in the house than we have in the last few days. Last few streams. I see Somitra has subscribed. Jake SF. Fairs. What's up, guys? Who else is here today? Who's vibing in the house? What are we trading? What are we looking at? Maybe I'll look to open up a trade here live on stream. We're going to go over Bitcoin, obviously. We're going to go over the September close. We're going to figure out how to position here coming into Q4. We can go back and look at previous Septembers. What did previous Septembers bring? Will history rhyme as it usually does? Lots of questions. Hopefully a lot of answers. We'll find out. What's up, Queen, Payne, Moon, Raccoon, Randy? How y'all doing? Tillin, my boy, Taylor. Ooh, I see Ace of Hearts. I see Ace of Hearts out there. What's up, bro? Bajorn, Blair, Boss Mac. What a great name. Bullish Future, you were here early. What's up, man? Cactus Leo. Sika Sloba. What's up? Crypto Builders Keep. Alien Psyop. Darren. DDG. Dylan. Escar. Folsom God. Kato. There you go, Jake. I saw you subscribe. Shouted you out now you're in the chat. What's up, bro? KDP. Kato. What's up, Kato? M Ninja. Mr. Green. Jake the Snake. Oh no, Y2K. One with Nature. RPM. Thu Vids. What's up, Thu Vids? Kellen Star. That's a good name. Giga Longbottom. Phenomenal name. 10 out of 10. Anybody got a better name out there? What's up, Akil? How are you, friends? Let's go. I'm sipping on a very normal sized Coca-Cola bottle. I'm just massively huge. This is a full 20 ounce. No, I'm not playing. I just need a little bit of the sugar today, I guess. I've got my run coming up tomorrow. I need a carb load. Gotta get them in now. I don't know how that works. Can we check out CXN Onyx coin? Maybe Justin. Feeling the love? That's right. The love is there. It is bullish and plenty. Tom has very large heads. Not really. Well, I mean, yes. Yeah, dude. 20 ounce Coke. Look at it. It just looks like nothing. That would make me like... I'd have to be like 10 feet tall. I'll just go with it. Oh, Pete, that's actually... You're right. Tom, you're correct. This is a 2-liter bottle. I'm actually 50 feet tall. Can I see the future? You better believe it, baby. Just as much as any other psychic. As far as you'll believe my BS. No, I can't see the future. Can't see the future, but I can see the candles. Have to settle for that. Bitcoin. Let's zoom out on Bitcoin a little bit. What do you think? Mexican Coke? Yeah, I wish. It's the American kind with all the terrible poisons in it. Let me turn down these tunes actually a little bit. Didn't realize how loud they were. By the way, guys, you're doing a great job. Keep hyping up the stream. Keep subscribing. Like it. I know there's more unsubscribed viewers out there. Join us. You can do it. Let's take a look. We just had August close. Hope you all had a great Labor Day. I did. I had a great time. My personal life, very bullish. Career life, sluggish. But personal life, very bullish. Still a bull market. August closed. After almost testing July's open at 107.2. Closed up at 108.2. Too close for comfort, if you ask me. And that is going to give us our first pivot point, our first point of interest, we'll say, for this month. There it is. Right there, 108.2. Anytime we move to 108.2, we should look for some kind of bounce, even if it's short-lived. If we fall below 108.2 and then we come back up and retest it from below, we should expect resistance, some kind of sell-off. So far, so good, though. We have moved back up 3.8%. September so far is green. August's open, going to act as resistance above us, 115.7. Until further notice, here's our trading range for September. 115.7, 108.2. Boom. Easy peas. That was an ugly candle. August really did not look great. We did hit an all-time high. It didn't bearish engulf, but that higher high wick and then the big red body candle. Yuck. That's gross. September is going to have to break 115.8, close above, give us some kind of hope, some kind of bullishness going into Q4. You need more protein? Get that protein, queen. Get that protein. BitBoy is back. That's right, Mike. I'm not sure where the connection there would be, but yeah, man, he's back, and I don't know. I just hope he's better. That's what I hope. That's what I'm hoping. OPUSD long. I don't know, man. Maybe pain. What's up, Purple Tie? We need a green candle as tall as Tom. Yes, that'd be good. No option for lower in September. Higher Q4. Of course. I was going to look back at September's. So Bitcoin's 15 years old. We have 15-ish Septembers. We're not going to look at all of them. Let's look at this run specifically. Last September, where were we? I can tell. I just look at the chart and tell you. I'm going to have to scroll. September right there. What's interesting is August was a red month last year. Obviously different than this August candle wise. It's almost upside down. You have the long bottom wick, red body, long top wick, red body. But September did trade through August's open and did even hit a higher high versus the previous high in August. Did not break the low. And where did it lead? It led into a very, well, it was the footstep. It was the first step towards a very bullish October, November. Even again, October, November, December. Very bullish Q4. Where are we at? September. Right there, August low. I could see the same thing happening. Finish off the 4-year cycle. The September before that, again, I don't even have to scroll through because Septembers are so easy to see on the charts right here. September 2023. August had done what? It had dumped again. I will admit this one as well, not the same condition. We're not at all-time highs. We didn't blast to higher highs. But let's take it simple. Red August, green September started the rally. This one went on longer. September, October, November, December, January, February, March. 6 months. 6 months. 3 months. Question mark. We can see that at least in this bull run, when you look at it in a bubble, just the last years of this bull run, Septembers have come off of a red August, a mostly boring, mostly sideways, mostly painful period during the summer, into low sentiment. The Septembers themselves have not been big months. This was 4% total. So like we're already, this is 3.91% right now in September, 3.97 in September 23. Those are the same size candles, but you can see not big ones, right? 24, 7.3%, bigger, but small months comparatively, but coming off red candles, closing green, and importantly, I would say highlighting range bottoms, right? Range bottoms, August low, August, September low. We can see that these are, in this bull run, solid reversal points going into Q4. So what do you think, chat? Is that going to happen this month? Is that what's happening this year? History does rhyme, and I'll say if any run has kind of been an echo of the 3-ish years of bull run, it's been this one. We've seen so much repetition in this rally. In fact, these even look the same. It's like year 1, year 2, right? It's like a rally into the beginning of the year, a pullback in the middle, and a continuation in the fourth quarter. Continuation in the end. 1, 2, maybe we're going for 3. Can it be that simple? I don't know. I don't want to make you guys think that like I'm trying to tell you this is exactly what's going to happen again, but it's something to think about. Something to put into your equation, put on your hat. Do you think it's going to happen again? It's absolutely possible. The interesting part about that is if it happens again, exactly like this, the 4-year cycle is exactly intact. And I've been kind of bitching about people saying the 4-year cycle's over. I would welcome the 4-year cycle to be over. I don't know if that'd be great, but I welcome it, right? I'm good with that. But if we go back 4 years from November of this year, you go back 4 years, November of 21, you go back 4 years, and what? You're off by a month. November, December of 17. Go forward 4 years from the last one. There we are. People are saying the 4-year cycle's over, blah, tops in. Well, why? What? What's happened? We're like not there, and so far, yeah, the upside hasn't been explosive or euphoric like the previous runs, but it has been really the same. You get an all-time high. About a year later, we bottom out, and from there, we climb up. We climb up until 4 years from that previous high. That's what we've seen. Inevitably, it will break eventually. Can't do that forever. I'm not willing to bet, though, on what year, what cycle that's going to be. You see that in 17. 17, you hit a top. About a year later, boom, here you are at the bottom. You spend the rest of the time slow climbing. And if you were just to remove the wick from COVID, it would look a lot more like the rest of it, right? So far, September's not the craziest months. I think we've also seen kind of we've seen rate decisions in September, right? We've seen, I think, rates cut, maybe rates raised, and then rates cut again last year, November. September, November, extremely big time for Fed interest rate decisions. Anyway, I got too lost in the sauce. Going too in depth. That's why some of you tune in. Getting lost in the charts, man. So September's not a lot of expectation here. Let's zoom in. From the monthly open, interesting that the month and the week started on the same day this month. That doesn't happen often. I would say that happens 1 out of 7 months. So like 1.5 times a year. Weekly open. Swung low, broke low from the previous week, and now back up. Something that's a little uncomfortable is like, okay, you have the monthly open at 115.7, you have the weekly previous open at 113.5. These are all places where you could find even temporary reversal profit taking. I really like 115.7 for this month though. You take your fib tool, You look, okay, what's half of the move? From all-time high, we fell down into August. What's half of that move? We very commonly, that's why we look to the 0.5 fib, is virtually every move retraces half. I'm gonna, maybe this will be a bad example. No, not a bad example. Just like from June to the all-time high in August. From 98 up to 124, retracing half was 110. We traded to 107. We see statistically almost every move retraces half. When we put that on our chart, we line it up, and it's the monthly open. It's the previous monthly open, 115.7. I like it. Doesn't have to be there this week, right? Could. Hell, like it happened today. Could be the end of the month. Could be at the FOMC. The FOMC is the... Ooh. I should schedule that. FOMC is like the 17th, I believe. 17th? Oof. The cola's giving me burpees, man. We retraced to the 618. Yeah, exactly. We retraced past the 0.5. I said almost every move up or down retraces, or basically takes back half of the move. The 618 is deeper than half the move. It's more than half the move. So we agree. What's up, M Ninja? Going fast, buddy. What's up, D-Gen? 2 weeks? I think it's 3 weeks. 95%. What's up, Foxy? How you doing, bro? Already September 4th, bro. Time is flying. Flying, dude. It hits me hardest so my running group that I've been doing 2 miles with big group people. Tomorrow, I know this guy started running. No, he never stopped talking about it. He's a CrossFit guy. It's tomorrow. And tomorrow, by the time we meet, let me see. By the time we meet, the sun will be like low. And by the time the run is over for me, it'll be sunset. 7:30. I'll finish before then. I'll finish before 7:30. But like when I started this, it was bright and sunny for like an hour and a half afterwards. Now it's like, but I might, if I can, well, as I continue doing this into the winter, not only will the sun go down while I'm running, but the sun will be down before I start running by winter. God, I hate that. I don't mind the cold. I hate the sun. I hate the sun change. Anyway, off topic. What's up, Mike Graves? How you doing, bro? Jason Toledo. What will happen? We're gonna find out. Let me look at some indicators. You know, I haven't. I've been trying to just take more time to focus on other things in life, not just watching the update of every tick. You know. Bear div on our high. Bear div on our high. Bull div on our low. All right. So here's some alpha. Looking at the weekly time frame. We see our RSI has traded lower. Our relative strength index. On the 16th of June, we saw a low on our RSI. On last week of August, we saw that lower. So looking at price, we have our low in June and our low here in August. Because price does not mirror RSI, because they're not doing the same thing. What we would see if they were doing the same thing is this would have come down here. Then they'd be doing the same thing, right? Low, lower, low, low, lower, low. But because they don't match up and we're looking at lows, that means we have bullish divergence. This is on the weekly time frame. It's a big time frame to have bull div. What I like is that it's pretty locked in also. It's pretty locked in. What I don't love about RSI, so that's a bullish sign. This is usually a sign of reversal, especially on big time frames. But what I don't love is in the bigger picture, we see our highs coming down. That's not what you want. You don't want your highs to come down. You want your highs to get higher. Chat, you know chat. Can't see I'm winking, but I'm winking. RSI high is coming down and price has been moving higher. This is since the beginning of 2014. So the bullish signal we have locally we have the opposite signal on a bigger time frame. Now, is it something to be super worried about? Definitely not in a, tomorrow, next day kind of thing. But it is something to be thinking about. We are all but at the end of the 4-year cycle. If it holds true, right? We're all but at the end. We've got 4 months left, 3 months and change. As we climb up, right? Likely getting one more iteration of bear divergence on the high, and that lines up really well with the end of the year. I think that is a signal more about the incoming end of year than it is tomorrow. Like, we're gonna dump or pump tomorrow. No, I think it's more bigger picture there. Looking at Market Cipher B, love Market Cipher. Got my link in the video description below. Momentum. I'd say momentum is mirroring that RSI. See momentum not peaking as high. Our lows starting to come down. Money flow, green here. Lower highs. I think that adds up. Momentum on MACD. I haven't been using MACD much, but momentum on MACD. Increasing selling momentum. Not just selling momentum, but increasing selling momentum. Not great. Hopium. There's Hopium. We have the bullish divergence on RSI on the week. We have our 20 weekly. Last week tested. This week potentially bouncing, finding that support. Not a bad way to do it. 𝐂𝐴𝐵𝐾𝐿 still thriving. Good end of the day. That brings us to today. We got a little wrap up of the higher time frames. Looking at today, I said I might take a live trade. Maybe I will right here. Maybe I will right here. Unfortunately, that would be a short. Is this a smart short? I don't know. Let me see what I got open here. Trading has been so rough lately. Ugh. I still got some stuff open, but a lot of it got stopped out. See. Oh. All right, I'm gonna take this. That's 4-1. 4-1. 25% chance to 25% odds and you break even. Better than that, you're profiting. Worse than that, you're losing. Let's see. No bull div on these lows. RSI under 50. Not the sign of strength I was hoping to see. Yeah, this might not be the smartest. Might not be the smartest. Let's find out. Should take it from this high. 13.4. Kind of like this though. Maybe I do it this way. Stop on this one. Actually, that's fine. I'm gonna do it this way. 113. Damn, that long it took it from 103 was thriving. Now it's only at 40%, which is still a huge gain, but like came right back to reality. All right, let me focus back in here. Okay, let's try that. Even the 20 daily is like, bro, you're jumping the gun. You're too early. 112.8. No, 112.6. I moved it up to the daily, which is 112.5 on perps. Then the next one, the 50 daily at 115. Yeah, that works. That works for me. Little hair comb pattern. Nice 12 hours. I can't help but feel this is just floating up though, because it got so hammered. No bounce, just down. 115.7. I might change that to 115.7 if it doesn't fill right now. We'll see. All right, let me refresh the chat. I'm into my own world, man. 462 votes. What happens in September? All-time highs. Bulls get wrecked. Bear market starts. You're right. Someone said there's no kind of in between. Well, that wouldn't make it a fun poll. 25% just sunglasses and blazing. All right. I like it. What's up, Trick Shots? How you doing, bro? 4 hour rolling over. Momentum up. RSI up, but man, that's a bad bear div. This kind of looks... I guess the reason I'm looking for a short here, right, is unless this retake significant price, this is just another momentum leg. Just like we saw back here. Honestly, it's not as clean, but just as we saw here. Really, we've just seen this momentum leg, momentum leg, momentum leg. Eventually it's gonna, eventually that'll break. We need to see a higher high. We need to see 113.7, 113.8, yep. But even then, I feel like even then you're in danger. Could end up playing out like this. All right, let me get back to the chat. Doing well, sir. Good. Long till the gap above 116.8. 116.8 is not a bad target. 116.8 is not a bad target at all. You have to remember though, CME trades higher. Like look, CME is at 113 right now. Spot, even perps are at like 112 too. So 116.8 could be 115.8. Could be low. It could be significantly lower. Filling on CME. Ooh, excuse me. Inquisitive. What's up, Derek Merrill? Smash the likes. That's right, brother. How you doing? What's up, Orhan? What the Mexican guys say? You know, other places speak Spanish to Mexico. It's a coin flip, bro, says Baby Genius. I always take my financial advice from a baby genius. Check out liquidity heat map. Either go down to 110 or 114. Don't do it if you don't feel comfortable. Yeah. I mean, I do it for content. What's up, Flajudabus? Loaded the guns. That's right, baby. What's up, One True Story G? Folsom Hodl. This bank now allows custody for institutional managers. How do you feel about trading off liquidation levels, aka Marty Party? Want to hear your opinion? I mean, Marty, my opinion is in no way, shape, or form did Marty Party invent that concept. I see he's always running on YouTube and X, like liquidation live levels, but like, yeah, we've used liquidation heat map for years. Everybody has. My thoughts on it? I certainly think there's value to it. Certainly value to it. I think it is, like almost everything in trading, better used as confluence than standalone. It's weird. I just anchored the VWAP there. I haven't really used this VWAP tool much. Why can't I change timeframes and still show me? Ah, that's why. Let's see. Here we go. VWAP. Been going back to the VWAP line of thinking. Monthly VWAP. Yeah, I've already invalidated it twice this month in 3 days. Since last month opened higher, let's look to August 1st. Put our VWAP there. Boom. No, not July 31st. Yeah. 114.5. I'm sure that's like around where liquidation levels are. What you'll also find is liquidation levels will almost always like line up with other stuff, because typically people the more that crowd here, the more liquidity is there and the more the market's attracted to that level. So chicken and egg and chicken. Chainlink, babies, Chainlink doing well. FOMC pump, but we didn't really get it last month. I mean, we started to and then dumped. What's poppin', King? How you doing, Orhan? Hey, Mr. Crown, how you doing? Big pause. Tillin. True. Tillin says that whales, big players can put in just orders. They can likely put in orders and even like pool them. Wait, you'll also like to influence the heat maps. which is true. They are risking capital, so it's a little more truer than like spoofing an order book where you just pull it. But what they also can do is, say your liquidation's at 114, they can CME should be discounted though, shouldn't it? Like, think about it, it's just a paper. All papers should be discounted. 200 EMA in 4 hours. 200 EMA 4 hour? What's going on there? Up here? 14.5. Yeah, I can see price moving there. Smash that like. What's up, Crypto Holic Love? How you doing, friend? Good advice, please. Smash that like button. We're just vibing and chilling, listening to tunes today while crypto figures itself out. If you could, make sure you've smashed a like, subscribe, joined the fam here. I appreciate you hyping it up. Bringing some energy, bringing some thoughts. Makes the show better. Can do without you guys. Also, check out the links in the video description below. Help support the channel using my affiliate links. They cost you nothing typically, unless you're signing up for, I don't know, like market site for Lux Algo. And it comes with perks, bonuses, the best of which is keeping this content going, of course. Skate the market. What's up, Skate Crow? Randy Greer, how are you, my friend? Craig Bowen. VWAP is so 2020. Now we're using moon cycles, which is funny because I feel like I was yelling about moon cycles more in 2020, and now like, I don't know. Good traders always have to be adapting. A sign of a truly great trader is that their methodology, the tools, how they use them are always changing. They're always dynamic. They don't get stuck in one way. And even, I'll admit, at times you'll see me get stuck in ways, and it always leads to less accurate technical analysis. The best analysts are always changing, always evolving. It doesn't mean moving on from something forever. It doesn't mean like, I'm never using moving averages again. No, it's being able to identify the conditions of the market, identify what's working, what's not in real time, continuously, and adapting. So there'll be times where we go back to things we haven't used in a long time. For instance, in the big euphoric state, things are blasting off. They're in price discovery. They're at all-time highs constantly. Like, moving averages aren't going to be that helpful, especially on big time frames, because they're just going to be so far away from price. But once you start seeing that market roll over from those highs, all of a sudden, moving averages are really valuable again, because they're going to give you a great downside target for at least bounces, right? At least kind of intra bounces, intra-time period or relief bounces. Why? There we go. What? What in the hell? What the hell? I don't know what's going on with my keyboard here. That's weird. I always use the keypad. Oh, something very weird is going on. Oh. Oh, wow. Hold up. I think there's some button or something being held down, or my keyboard thinks a button's being held down. Because all of a sudden, oh no, all of a sudden, anytime I hit a key, it's like tabbing shit. What in the hell? I also just heard my trade fill, which is a frightening thing to experience in the moment when you're like freaking out about your controls. What in the hell is happening? All right, so that short did fill from placed live just earlier. It is up $1.15. Let's go. I'm not sure what to do. Like, I just hit the number 5 and it tabbed it. I'm gonna unplug my keyboard for a sec. I'm gonna hit all the buttons. Okay, let's hope that worked. If that didn't work, I don't know what to do. Right, okay. Dude, it's still doing it. What's happening? I hit number 1 and it's tabbing? Why is it tabbed? What in the actual hell is happening here? Am I being trolled? Am I in a prank show? Did you guys sign me up for a prank show? Is this punked? I hit D, everything just went down. What in the Okay. I have no idea. I don't know how well I can navigate without my keyboard. This is strange. I have a feeling I enabled some dumb feature of I don't know, for using it if you're handicapped or something weird. What did I do? I know one time I had this happen. My NVIDIA entered gaming mode or something weird. Disabled a bunch of buttons. Let me see. Oh, I think we're back. I think we're back, baby. Oh, this is super strange. What the hell, bro? So my keyboard's working in the YouTube chat, but then it's not working here. All right, so I just have to do this manually. That's not the end of the world. Not the end of the world, although it is the end of the world. It's ridiculous. It's filled. All right. What's up, Scott Tran? Random thought. Kashkari equals cash plus kari. Kashkari, Japanese definition. Kari, borrowing debt. Loan refers to that. That's interesting. Yeah, there's a FOMC member speaking live today. They might be speaking right now. I kind of forgot. There's only 350 people watching it. Did you give a keynote? Oh, it's a question and answer. Oh, and it's really quiet. No wonder no one's watching it.
Hello, everyone. It works. Great. I got on the stool without any accident. We're in good shape. Well, Lynn, thank you for that nice introduction. That saves me a whole page of notes.
Wow, it's actually unlistenable.
And
the volume's up all the way.
Kate Kelly, I'm thrilled to be here with Neil Kashkari.
Well, I guess we're not going to watch that.
Not only have we worked together, but we've become very good friends.
This is maximum volume. Maximum.
Yuli and TK.
Well, let me open the volume. Let's see.
But it's just been a pleasure. So we have
browser's turned all the way up.
So thank you for the introduction. We can skip that whole part and go right into what's going on now. Before I dive in, do you have any welcome remarks or anything to share?
Still not very
First of all, thank you for having me. It's great to be here. I see a lot of people I've gotten to know over the last decade that I've been here in Minneapolis. So it's a
This is a good time to explain what the Beige Book is in case somebody gets in there.
Sure.
Actually,
so the
good.
Beige Book, so there are 12 Federal Reserve banks, as Lynn said. All 12 Federal Reserve banks.
Beige book comes out in
add a
3 minutes.
chapter or a few pages is something that's called the Beige Book. Every 6 weeks, the Federal Reserve System publishes this. It's basically a collection of quotes and anecdotes from businesses and labor groups and workers, large and small businesses and workers and labor groups, et cetera, to basically get a sense of what's happening in the economy. And then economists and market participants will read this to kind of get a sense of what are the anecdotes telling us. You know, we get a ton of data nationally and regionally on the economy. Inflation data, employment data, GDP, sales, consumption, but a lot of times that data is confusing. Some data sources say the economy is growing really strong. Other data sources the same week or the same month say, no, the economy is cooling. Well, how do we make sense of that? Anecdotes and conversations that we have help us to make sense of those conflicting signals. And so who knows what you say, maybe it gets added to the Beige Book on an unattributed basis, but I'll also tell you, we are live streaming this. So there will be some attribution to what you say because somebody online is going to hear you say it.
That's right. Actually, no, they won't
That's
because
great.
no
I always
one's
thought it was an
watching your
accomplishment to
stream.
get it in the Beige Book. That was fun. Anyway, as Neil meant, we chatted, and normally a fireside chat, we'd leave some room for Q&A at the end. Neil and I decided that we'll kind of feel a natural part during our fireside chat to kind of open it up because this is an amazing group of women leaders, just representing just a diverse. We've ever been in more headlines for the Federation. Real quickly, we've ever been in the basics of the Fed's role in
Central bank, something called the Federal Reserve Act that created the Federal Reserve System. So we are the nation's central bank, and our jobs are to try to manage, among other things, try to manage the ups and downs of the U.S. economy. You will hear us talk about something we call the dual mandate, where we have two primary goals. One goal is we want stable prices, which is inflation of around 2%. And the second goal is we want maximum employment, as many Americans working as possible. Well, when inflation took off after COVID, what did we do? We raised interest rates aggressively to try to tamp the brakes on the economy and slow things down to bring inflation back down. We've made a lot of progress in bringing inflation back down, but we're not done yet. Inflation right now is running in the high twos, depending on how you measure it, 2.7, 2.8, 3%. And we have our work to do to get it all the way back down to our 2% level. And at the same time, we want as many Americans working as possible. Sometimes these two things are in conflict. If we slam the brakes on the economy to bring inflation down, we might push unemployment up at the same time. And so you'll hear us talk about a soft landing, which is get inflation down, but keep the labor market strong. We've made a lot of progress on that, but we're not done yet. Inflation is still too high, but at the same time, the labor market is showing some signs of cooling. So we're getting into a tricky position now for the Fed. Now that's separate from fiscal policy. We all pay taxes, either local, state, or federal taxes, and then our elected leaders decide what to spend that money on, how much to tax us, and what to spend money on, whether it's healthcare or defense or education. That's fiscal policy. Our jobs are to handle monetary policy. The system is designed for us to be independent of politics, and then Congress's job with the executive branch is to decide taxing and spending policy. That's inherently a political process
that
our elected leaders make those
distinct
decisions.
sound of plates.
And that leads us into
I
maybe
agree.
understanding a little more about the FOMC. I mean, just the makeup.
distinct
We have
sound
a
of
meeting
plates.
coming up, was it September 17th? And that'll be a dynamic one. Can you explain just, I mean, I just picked up the papers this morning. We have the governors, we have, how many of the bank presidents voting. Can you just give us a little overview?
So this was in 1913 when Congress decided to create the central bank. They did something unique. They wanted to keep it as far removed from the political process as possible. So there are 7 governors in Washington who were
They must
appointed by
be
the
at a
President of the
buffet.
United States.
Golden
So
barrel.
President Trump, in his first term, appointed a few. President Biden appointed some, and now President Trump has now appointed somebody whose confirmation hearing is later this week. Those individuals, there's 7 of them, serve up to 14-year terms. So that's a long term, and the idea is you wouldn't get a lot of turnover when there's a new administration that comes in. On top of that, you have 12 independent Federal Reserve banks. So I was not appointed by the President of the United States. I was appointed by a local board of directors of business and civic leaders. Kate served on my board, for example, for 6 years until she reached her term limit. So that way, we are even more independent of the political process because we were appointed locally by local business and civic leaders. So at the FOMC, you have 19 people, you have 7 governors and 12 Reserve Bank presidents, and then the presidents rotate in how we actually are voting on that committee. So it's a quite convoluted structure, quite complicated, but it actually works. You actually get representation from the regions across the country, and you have a system that is quite well insulated from the day-to-day politics that so often dominates, what we see in the news all the time. And that's by design.
Yep.
They're
we
at
might
a
come back to
buffet.
that because
It's like
it is in the news a little more than normal. But first, I'd love to just chat about the inflationary pressures and the pressure from Trump to drop rates coming up on the next FOMC meeting. Can you describe what you and your colleagues are watching in the data and in the anecdotal comments on inflation? And you touched on the pandemic. Maybe you can describe how it's different than at that time.
It's overrunning.
I mentioned that inflation is coming down. And so we look at all the underlying components of inflation. One area that inflation is coming down is housing inflation. And this is happening as we expect. That doesn't mean home prices are falling. That doesn't mean rents are falling. It means the growth of rents and the growth of home prices are slowing down. That's
still faster than your wages.
We expected this to happen because we look at the new leases that people are paying. So if you move to a new apartment, there are series that track that. And we could see that when lease rates soared, it took a couple of years for that to work its way through all of the other inflation data. Well, then lease rates slowed. And then we said, okay, that probably means that housing inflation in the measured statistics is going to fall. That's on track. That's happening. Services inflation has been declining. It's leveled off a little bit, but it has been declining. Wage growth has been declining. Services and wage growth tend to be closely linked. So all of that suggests the economy is cooling, the labor market is cooling, things are slowing, we're achieving that soft landing. Now the wrinkle, of course, are tariffs. So before the pandemic, goods prices, so you buy goods and you buy services. Goods inflation used to be negative. The reason that goods inflation was negative most years is because manufacturing was becoming more productive and we were buying a lot of goods from abroad. And their manufacturing was becoming more productive. So we were actually seeing declining prices in the same good that you would buy. That was important to get our overall inflation level down. Well, before the tariffs hit, goods inflation had fallen back down to pre-pandemic levels. It had become negative again. But now goods inflation is climbing. Why is it climbing? It's climbing because of tariffs. Because if you charge a tariff, which is a tax increase on goods that you're buying from abroad, the prices of those goods are going to be higher.
It's crazy
so
that
we're not surprised
people
by
are
that.
arguing this.
But that is pushing up now. So some components of inflation continue to come down. The goods inflation is pushing that back up. So the average inflation rate is kind of moving sideways right now. So a big debate that we're having is, are these tariffs going to lead to a one-time effect? Transitory, you've heard us use that word before. Is it going to be temporary, or is it going to be something that's more persistent? And that's what we're trying to watch and trying to understand.
That's the only question.
There are theories why it should be temporary, and there are theories why it might be more persistent.
Yeah, why it might not be.
I'm in the camp of, hey, we need to kind of watch this before we reach any firm conclusions.
If Trump had to give all the money back, that'd be deflationary.
Influences of AI.
It feels
immigration.
Taxes is deflationary.
Well, immigration is a huge factor that's changed this year. The prior years, 2 or 3 years, there was, if you looked at the data on net immigration flows in President Obama's terms and President Trump's first term, they were pretty consistent. In the Biden administration, they skyrocketed. And now they've basically plummeted. And so to go from a labor force that was growing at gangbusters levels to now that's growing very slowly is making the economic signals that are always confusing even more confused for us. Because one thing we look at is how many jobs does the economy need to create every month to keep up with population growth. In the peak of the last few years, it was probably, I'm going to guess, 150,000 a month. We needed to keep up just with population growth because immigration was high. It's now probably about 75,000 a month. So when you see a job report that comes out like this Friday, is it a good job report or a bad job report? Well, you need some baseline of good relative to what?
This guy's actually
and
based.
So there's a lot of uncertainty, but we know the immigration numbers are a lot lower. And if you have fewer people joining the workforce, GDP growth is going to be slower because you have fewer people producing things and you have fewer people buying things. So
this guy said nothing incorrect.
Slower. So that immigration is a big factor that we're studying and watching what it means.
It's a huge factor in GDP.
And then AI, I'm a bullish on AI.
Too.
I'm very pro. I think it's going to be really important.
He's bullish on AI. Go long.
Most major technology innovations in the last 100 years took decades before they really showed up and moved the needle of an economy as big as ours. So I'm very skeptical that AI is already showing up in the economic data. Will it show up eventually? Yes.
Yes.
Maybe, is it going to show up faster than electricity showed up? Maybe. The internal combustion engine, these are the types of things I'm talking about that are transformational. Those generally took decades to really show up and move the needle of our national economy. I'm skeptical that after just 2 or 3 years, we're already seeing a meaningful imprint of AI, but I think it'll happen.
Dude, this guy is actually really based.
Sentiment. When I was on Neil's board, I just learned, kept hearing, as goes the consumer, goes the economy. It's a huge
How would illegal
element.
labor be a factor in the economy, bro?
Groups like today.
It's a huge
this
factor.
has been true now for the last few years.
In all economy.
First of all, understandably, the American people hate inflation. So people were gloomy about the economy because they hated going to the grocery store and seeing these higher prices than they were used to paying. Me too, by the way. I do most of the grocery shopping for my family.
3.
So they would answer surveys saying we're doom and gloom. And then they'd spend lots of money on Taylor Swift tickets, okay, and airplane tickets and going out to restaurants. And so there was a disconnect between what people were saying and what people were doing. I think that disconnect has diminished over time, and we are seeing consumption growth is definitely lower than it was a year ago. And people are still feeling nervous about the economy. Now, the flip side of that is stock markets are booming, financial markets are booming, and so now those are generally wealthier people, so maybe wealthier people are feeling more optimistic and are investing more. But there are sometimes mixed signals between what people say, how people report that they're feeling and what they're actually doing at that time.
I was going to ask you about BLS data,
guy.
but that seems like old news now. But the
He's
integrity, that's
very
important, right?
Fair and balanced.
We rely on lots of different data sources. We rely heavily on the national statistics that are produced by the Bureau of Labor Statistics that you mentioned, and the Bureau of Economic Analysis, among others, and the census, among others. These are all critical data sources for us, for other policymakers, and for businesses and financial markets. So we need the best data we possibly can get. And then we supplement that data with data provided by the private sector. And a lot of times those data tell...
This guy, for those of you tuning in randomly, people are commenting about tariffs. He said that tariffs are the curveball. That there's an argument to be made that tariffs impact would be short-term, transitory. But then there's an argument to be made that they'd be long-term. And he said the real answer is that they just don't know yet. That's super based. He's just throwing it down the middle. He's just telling us about these things. He's not really telling us how to feel about these things. He did say something maybe some people are triggered by is he did say that tariffs initially cause inflation. They initially increase prices, and it's insane to think otherwise. Like you're literally making goods cost more. That is what inflation is. But that kind of inflation isn't what they're worried about. We're worried about inflation on a bigger time frame. This guy actually, I would listen to him.
For the country.
He's saying solid stuff.
How this really manifests itself.
Let's see if he makes me look bad after I just endorsed him.
That we are not serious about getting inflation back down, then you're going to change your behavior in such ways without realizing it. You're going to change your behavior that makes that inflation
Everyone
more likely
agrees dead, of course, but that's also not.
It's a funny thing about economics, macroeconomics. It's a little bit about
can't stop them.
Mass psychology of what everybody believes, and then based on what you believe, you change your behaviors. sometimes that makes those beliefs become more likely to happen. And that's true on inflation. If we all believe high inflation is here to stay, you're going to go to your boss and you're going to say, I need a raise so that my family can just keep up their basic level of
Also based as hell, this is very true.
Or if you have employees, you're going to say,
Perception
boy,
is
I know
huge.
I need to pay my people more because they're going to be frustrated if their family is falling behind. And then what you're going to do is you're going to go to your customers and you're going to charge them more.
Look
And
at
you're going
that.
to
We
say, hey,
top
you
ticked
see the
that.
high inflation that I
Top
see.
tick that live.
I have to charge you more. And you're going to go to your suppliers, and your suppliers are going to say, hey, I need to charge you more. So this psychology gets embedded in the society, and it becomes a self-fulfilling prophecy. Our job at the Fed and the central bank's job is to not let that happen. And when it starts to happen, to hit the brakes, to break that cycle so it doesn't happen. The more you have confidence, the American people, market participants,
Wages have
people all
not
around
kept
the
up.
world, have confidence that the Fed and other central banks are making decisions based on data, not on politics, the more you're going to trust, hey, they said they're going to get inflation back down to 2%, we believe them. And I'll give you a little data point, anecdote, that was comforting for me. So when inflation exploded during post-COVID, we had a roundtable of labor unions to hear, what are you seeing? What are your workers experiencing? How are your wage negotiations going? And they never talked about inflation. But if you looked at the math of what they were asking for from their companies on behalf of their members, you could see that they were trying to get their members caught up to the high prices, but they were implicitly assuming inflation was going to go back down to normal levels. They didn't use those words. But when I looked at the math of what they were asking for, that was true. I could see they had confidence we were going to get inflation back down. If they didn't have that confidence, they'd be saying, hey, I don't just need a 7% raise this year for my members. I need it next year, and then a year after that. And then that vicious cycle starts to take off. And so that's why confidence of, and it's not just independence, confidence of independence of the central bank is so important for us being effective in getting inflation and keeping it low, getting it down and keeping it down.
And can you kind
There's
of
always inflation,
update
guys.
all of
Always
us
inflation.
on the current situation with the FOMC membership or the committee right now? We have two governors, one that's resigned recently in August, and the other one that is, I don't know what to refer to her. She's not fired yet because she's pushing back. But coming into the next meeting, that's going to make a big difference, isn't it, in the discussion?
Well, I don't think it'll make a big difference in the discussion because there's 19 of us around the table. So what Kate is referring to is one of my colleagues, Governor Adriana Kugler. She was appointed by President Biden. The way these 14-year terms work, they serve the balance of whatever remaining term is on that seat. So she only had a couple of years anyway.
Yes.
Her term was going to conclude at the end of January, but she decided in August to resign early, creating an opening. And then President Trump has appointed somebody who I believe his confirmation hearing is sometime this week. So if the Senate acts, he may well be in the meeting in 2 weeks from now. So we may have a full quorum of 19 people there. And then you referenced Governor Lisa Cook, who there have been some questions about the mortgages that she signed up for before she was a Fed governor. And President Trump announced that he was firing her. And now it's the courts are going to judge whether or not this meets the standard for removing her or not. I have no information about this other than what's been in the press, so you know what I know. I don't have a view of that. I do know that both Adriana Kugler and Lisa Cook are first-class colleagues, serious economists, brought great data and analysis and insight to the deliberations. And so I look forward, hopefully, to Lisa being able to continue to contribute because she is a very high-quality colleague whose opinion I valued. Nonetheless, there are 19 of us around the table, all bringing our own lifetime of experiences, all bringing our own data and analysis that we look at, that we rely on.
All bringing our own
and then
data.
The,
and then
the
we
deliberation
all
is
lose it right before
it's the best
FOMC.
argument wins. I mean, it's
All
like
from the
if you can
FOMC.
bring good arguments to the table, you will persuade your colleagues that, hey, your view on monetary policy is the right one or is the better one. And so I'm confident that
Talked
we
about
have
AI too.
a robust group of people.
This guy's
around
talked
the
about like
table
every
who are
topic
committed
people are
to
bringing up.
achieving the mandates that Congress has given us, and I don't think that that's going to change.
And we're thrilled that you're
good.
in that conversation.
I like
because
this guy.
A little
I don't know.
tidbit, Neil was appointed in 2016, and is the longest-standing bank regional president in that
That could be why.
conversation. So that's wonderful. We're proud of that. Yeah.
That's a joke. Sure. Yeah. But it exists.
Be ready. We're going to be opening it up for
It's there.
questions real soon. I want to ask, though, one other kind of
He's
topic
the
of questions on
longest
the global
sitting president,
economy.
I guess, of Fed board.
We are really the reserve currency in the U.S. for the world.
That works for
And
the
that's-
Fed.
Can you just speak to the importance of that? And maybe a
wish.
few things going
I
on
wish
right
they
now
paid me.
have people
I covered Chappelle for
kind of
free.
concerned about that.
So what causes one currency to be the reserve currency? What causes that? It's a symptom of which major economy to investors around the world have the most confidence in. Whatever major economy that is will be the,
I work for
it'll end up
Bitcoin.
working out. That will be the reserve currency. And far and away, the US economy is the most competitive economy in the world. I mean, we are walking away from Europe. While we talked about AI and how big an impact is it going to have, Europe's approach to AI seems to be, let's try to stop it. That's not going to work, okay? Now, maybe you can try to manage it, but you should certainly participate in it. They generally have a culture of, they're afraid of innovation. I mean, I'm overstating it, but not that much. And if you compare us to China, China has some things going for it. They've got scale. But if you look at their demographics over the next 50 years, they just fall off a cliff. I mean, China is, and we have, while we're not perfect at managing immigration, I'm the son of immigrants, my wife is an immigrant, we do it better than anybody else, just about. China is abysmal at it. It is just not even an option. So when I think about the US's competitive position relative to China, there's no contest. So what's going to cause us to lose our reserve currency status? If we really hurt our own competitiveness, or one of these other major economies really becomes very, very competitive. I don't see the latter happening. Now, is it possible we could do things that hurts our own competitiveness? It's certainly possible. I hope we don't. But I feel good about the U.S. maintaining its reserve currency status. But it is a relative game. It's not just up to us. We have to keep our house in order, and then we'll see what other countries do.
I love that positive note as several world leaders are meeting in China. So it's, that's really good to hear. I really want to be careful to reserve the remainder of our time for questions unless you think we haven't covered something. And as a reminder, just raise your hand. We have two people running around with mics. Thank you, Lynn, and somebody else over here. And then mention your name, your organization, and then ask your question if you would. And again, this is being live streamed, so we want to make sure they can all hear.
Question from the chat, because walking around from Shonda Smith Baker says, economic inequity remains one of the biggest challenges for our region and nation. What role do you believe the Fed can play in fostering a more inclusive economy?
Well, one thing we do is we do a lot of research on the economy. We have a couple centers at the Minneapolis Fed. One is, we call it our Center for Indian Country Development. We have a lot of Native American tribes in our region who have very different economic experiences than just about anybody else. And they've had structural challenges and barriers to their development for centuries. And so we have a research center focusing on trying to understand what are those barriers, understand what's happening in tribal economies, so that other policymakers, fiscal policymakers, have the data that they need as they try to design programs to serve Indian countries. So research is a big role that we can play. Another one, we have this thing called the Opportunity and Inclusive Growth Institute, which is literally focusing on economic disparities and barriers, not just racial barriers, there's rural, urban barriers. There are many, many ways of slicing this where there are barriers to people participating in economic growth and opportunity. And I'm very excited about the research that's being done in both centers. Now, with monetary policy, the tool that we have, you can't target it at Minnesota or California or New York or this group or that group. We're all in the same economy. We're all using the same dollar. So we have the bluntest of all instruments. So we cannot use our monetary policy tools to drive the kind of changes that that Shonda is asking about. But we can certainly do research that helps us understand the labor market and understand what these barriers are. And that research could help other policymakers to tackle these issues.
I'm Sheila Riggs from the University of Minnesota. I wanted to follow up on Kate's question about artificial intelligence and what you've talked about. I'm bullish on it too.
I'm bullish, you did say that.
And the 𝐒𝐫𝐵7, there's the huge AI companies seem to have a big proportion of the publicly traded companies. How do you factor that into your work quarter in, quarter out?
It doesn't so much factor in. I mean, I don't want to say it doesn't factor. It doesn't concern me, but when we look at, for example, I'll ask a question, why is the stock market booming? And then one way we'll slice the data is, well, you take the 𝐒𝐫𝐵7 out, what is everybody else experiencing? Or what are small cap stocks experiencing? Are their earnings growing differently? To try to get different slices of what's happening in the underlying economy. I mean, it's a very complicated question you're asking, because in the future, are the 𝐒𝐫𝐵7 going to dominate AI? Are other innovative companies going to come along and beat them at their own game, so to speak? I don't know the answers to that. But just looking at the headline stock market might be sending us a misleading signal if other parts of the stock market are experiencing something very different.
Thanks so much for being here today. Nisha Bochway, I'm the Dean at the Humphrey School of Public Affairs, and so I have an education-related question. Minnesota faces some of the nation's largest achievement gaps, and that connects directly to our future workforce. At the same time, higher ed is dealing with rising costs, an enrollment cliff, and what is perhaps not recognized as much, too few college-ready students coming out of K-12. Why does the Federal Reserve care about these issues? And I think that's perhaps a softball question. And what kinds of investments do you think are critical to sustain a strong and equitable economy?
Well, I appreciate the softball. I'll take them it's not very often I get them, so I'll take them when I get them. We care a lot because it's all about our labor force. And, it goes back to, we have to achieve maximum employment. That's one of our goals. Well, how do we do that? Well, if people are not educated to participate in our economy, maximum employment is going to look a lot smaller than if everybody gets a good education and everybody can contribute. So it's directly related to maximum employment, directly related to our GDP. How big is our economy going to be? How vibrant is it going to be? So that's critically important. In terms of what to do, there's a lot underneath what you said. So like you said, a lot of students are showing up. Those who can go to college are not ready. So then the colleges that I meet with say, oh yeah, we spend the first year remediating, trying to get high school students just up to basic levels to be able to do college work. That's not the best use of it's important that they do it, but it'd be better if those students were already ready when they showed up there. And then you also touched on the fact that many colleges, especially smaller colleges, are losing students. And you're going to end up seeing more consolidation. I think it's inevitable. You're going to see more consolidation across higher education all across the country. And those are, tough challenges for those individual campuses or those individual colleges. And then finally, costs continue to balloon for families. It cannot be that we just simply have to ask families and students to take on more and more debt. That is not a sustainable model. That is not a model that's going to position us for competitive success for the next 50 years or next 100 years. So we have to pioneer ways of giving world-class education to more of our students at lower costs. If it doesn't do that, that's got to be job number one. How do you scale high-quality education? And so, I'm not going to offer you an answer. I'll look to you and other university leaders at what models you are considering or you're innovating to try to achieve that. But that's what we have to do. It cannot be more debt. That's not the answer.
Hi, good afternoon. Thank you. Cinnamon Pelly, and my questions are, how does the Fed assess the impact of changes on low-income communities, and how do you make sure that employment gains are equitably distributed, and especially in this climate, sort of what steps are being taken to ensure trust and transparency? Thank you.
Well, we do a lot of outreach. One of my colleagues, 𝐂𝐡𝐚𝐫𝐭 𝐎𝐧 is here, who leads, among other things, she leads one of our groups that does a lot of this work, where we go out and we don't just ask businesses, what are you experiencing? We ask workers, what are you experiencing in the economy? We ask low-income workers, what are you experiencing in the economy? And a lot of times we learn different things. So my first 4 or 5 years that I was here, if we looked at the national statistics, it looked like we were at maximum employment. And I'd go meet with businesses, and they would say, it's a historic worker shortage. There are no more workers out there. And then I would go into low-income communities in Minnesota, and they'd say, we need jobs. Or we're stuck in part-time jobs, and we need full-time work. And I said, I don't understand. All these businesses just told me that there are no more workers out here. And an hour later, I go to this meeting, and these folks are looking for work. What's going on? What I realized was that there were people out there who wanted to work, and that if the economy was allowed to grow and allowed to run a little bit hot, businesses would work harder to go find workers and bring them into those jobs. I'll give you one more. I mean, I could go on this topic for an hour. I won't. I'll give you one more anecdote. During COVID, the economy started to reopen. I went to a gas station near my house, and there was a help wanted sign on the door. And I asked the manager, I said, what's it like trying to hire somebody? He's like, I've never seen it like this. It's impossible for me to find workers. I've been a gas station owner for 30 years. I can't find anybody. And I asked him, I said, what is it normally like? He said, well, normally I put a help wanted sign up, and that day I have a lineup of people to pick from for my gas station job. So my takeaway from that is, why was that normal? A gas station in the normal economy says help wanted, and there's a line of people. That cannot possibly be a healthy economy if that's normal. So anyway, I'm giving you a long rambling answer because there's a lot underneath your question. One of the things I've learned is if the economy is allowed to grow and businesses have to compete to find workers, they work harder to reach the workers they normally wouldn't even try. And then that gives those folks a shot. And then they come in and they're able to contribute, they're able to provide for themselves, they're able to develop skills, and then it ends up being a virtuous cycle instead of a vicious cycle. But what I called it a higher pressure economy that we achieved in like 2018, 2019, we started to see real gains for people on lower income communities that had before not been able to participate.
I like the way this guy speaks.
𝐂𝐡 Ellis,
For Fed.
principal strategist for
For
Able
Fed.
Endeavors. I, like many folks, have been aware of the data that has been circulating around the fate of Black women in the workforce. In particular, over the last few months, over 300,000 leaving the workforce. I will tell you from personal experience and from the conversations that I'm having that there are many that see the fate of your colleague, Lisa Cook, as illustrative of what's happening more broadly. So just want to name that, particularly as you go into this conversation.
I'm just going to comment on the Lisa Cook thing. If she's done something criminal, take her to court, convict her of a crime, right? Like, this is America. Like, you got to go to court to be guilty. You're not guilty of a crime.
The next
Then
meeting.
punish her.
What I'm curious to know is what research has been done to explain or articulate the impact of this trend on the broader economy, and also the impact of income inequality, particularly in matters of quality of life, like crime.
In terms of the recent trends that you're talking about, I think it's too soon for there to be new research having been done, but it's something we're paying attention to. We do know that in economic downturns, traditionally, Black and brown Americans tend to be the first to lose their jobs, and then in recoveries, they tend to be the last ones hired. Please.
So what has been the impact of the way that Black women fare in the economy?
Yep, can't hear her.
Well, I think, they represent a very important part of our economy, a very important part of our labor force. So if they are pushed out, so to speak, then they're not able to contribute. It has direct impact on them and their families and their immediate communities, but it has effects on GDP broadly, how big our economy is, how vibrant our economy is. And that's why my comment a moment ago is, one of the things I was proud of is the economy we achieved in 2018, 2019, before the pandemic. We called it a higher pressure economy, and what that meant was businesses were frustrated that they couldn't find workers, but then they were reducing their own barriers to try to bring people in because they needed to, and that benefited some of the folks that you're talking about. It benefited Black and brown people, men and women,
orange workers?
disproportionately, because you saw them start to finally close gaps in that in the later stages of that expansion. And so I think there are tremendous benefits from being able to achieve that. And that's why we want to keep the economy, we want to keep the labor market strong. But at the same time, we got to get inflation all the way back down. So the scenario that we're in right now of a labor market that is cooling, your evidence suggests that it is cooling, and inflation that's running too hot is a very difficult situation for a central bank because we have one tool. Our one tool can push down inflation and the labor market, or it can push up inflation and the labor market. And so now we're at this touchy area where we have to be very careful that we don't overdo it one way or the other.
Get down.
Mr. Kashkari, thank you for being here. I'm Lisa
Get
Erickson. I'm
down.
retired from U.S. Bank Wealth Management. So in recent years, some
What
of the
about
survey
AI?
data that you mentioned that the Fed relies on has had declining participation, which obviously raises questions about, how the accuracy of that. And so I was just curious, your thoughts on how we can address some of that trend, people just not participating and returning the surveys, as well as the impact on the Fed decision-making.
Yeah, so you're right. Over time, especially COVID, a lot of these surveys are done by landlines. And if people have stopped using landlines or just have cell phones or just use the internet, participation has gone down. There are people much more expert than I am, professional data scientists, economists who do this work, who are trying to pioneer new ways of getting this data to make sure that we have the data. And if you survey people who only answer their cell phone, it's a different survey than if you survey people who only answer their physical landline, if they still have a physical landline. And so there are people who are working on this, take it very seriously, who want to address it. My message is simply, we need to support them so they can do their best work to figure this out, because the data is as important as you said it is.
Good afternoon, Leanne Rasajak,
I'm gonna
CEO
tear
Women
up
Venture.
inflation.
We're the only CDFI
Brilliant.
focused on women in the state of Minnesota.
This 10x mics.
My question is regarding childcare as infrastructure. One of the greatest opportunities that we have in this state and across the country is to solve for childcare as a crisis and as an issue. There are many people, including those in my neighborhood, those who are low and moderate income clients, who want to work and cannot because childcare is either not affordable or they can't find a provider. Many of them are exiting. So would like to get your perspective when we think about workforce
Look at that.
and
Look at that
workforce
short taken
development
live,
and
baby.
keeping women in it.
Look at this taken live.
What's your perspective around childcare as infrastructure?
So but you're all asking me these very serious, substantive, meaty questions, and I have lots of thoughts. So my wife and I have two young children, a 4.5, almost 5-year-old son, and now a daughter, 6.5. Our daughter just entered first grade. Our daughter has one more year of pre-K before he enters kindergarten. So we've been in the childcare market for the last 6 years.
Excellent.
I've thought a
Set that
lot
stuff
about
up.
this. And my first question was, I don't understand, how can it be so expensive, and how can the folks who work there make so little? Like those two things, there's two problems going on here. And if we're going to elevate their
saw that. Raise
wages,
your hand.
then it's going to be
You
even
watched
more
me do this
expensive.
today.
So what's the solution? Then I finally came up with an analogy, which is this. It's a lot like agriculture. All around the world, countries subsidize agriculture. Why? Because they want high prices for farmers and low prices for consumers. Those two things are directly in conflict, and the only way you can achieve high prices for farmers and low prices for consumers is with subsidies. The only way you can achieve
Facts.
higher wages for quality childcare workers and affordability
is
for
at the
middle-class
YMCA.
families is with subsidies. Now, it's not the Fed's job to advocate for subsidies. It's for the political system. It's for all of you. But that's the math. And so, and the other thing I realized is, there's a lot of it is how things are labeled. So if a mom or dad is staying home taking care of the child, they are in the workforce. They're just not in the measured workforce. Because if I hire somebody else to take care of my son or daughter so that I can go to work, that person's in the workforce. So part of it is complicated by what are we counting as in the workforce, and a parent staying home with the children are not counted, but they are doing very important work
Very
for their
valuable
family
work,
and for
yeah.
society.
That's facts.
But at the root of this
Based
is
again.
affordability and decent wages for the workers so that those child care centers don't close. It is about somebody subsidizing it, whether it's businesses subsidizing it, which there's some anecdotes of that, or states or the federal government. I'm not here to say good idea or bad idea. I'm just laying out the math, and then all of you can decide what's right.
That's like kind of what he's done the whole time on every topic. He's just laid out.
Thank you,
He hasn't
President
said one
Kashkari. My
direction
name
or
is
the other.
Amber Hansen. I'm with the
So they're
Mortensen Family Foundation.
Complicated topic.
And my
things to
question
consider.
is something that you alluded to earlier. Recently read that the administration has currently removed approximately 1.2 million immigrants from the country. And in Minnesota, my understanding
might
is
suck.
about 86% of farm workers are immigrants, and about 45% of those immigrants are undocumented. As this administration continues to persecute immigrants across the country, what is that specifically going to do to our food costs in Minnesota? And how does that impact our economy as a whole, not just here, but nationally?
I mean, if there were far fewer people to work on farms, in your example, or work in meat processing plants, as an example, which I think a lot of immigrants also work there, the ones that I've toured, that was certainly true. Naturally, you would expect to see prices go up because they'd be able to produce less if you've got supply and demand is what it is, but supply gets
up,
reduced
Andre?
because there are fewer
Luis,
workers to produce whatever that good
Marianne,
is.
Connor.
You're going to see the price end up going up, ultimately to try to attract more workers to come in and whatnot. So I think there would be an inflationary impact. I know I've seen the headlines that many businesses have been arguing, hey, these folks are doing critical work on behalf of the American people, and that some waivers have been granted and whatnot. I don't know the details of that, but it is something to pay very close attention to because it will affect the economy overall, and it will affect inflation, especially in the sectors that are directly affected, as you indicated.
Hi, Jill Walker. I'm a partner with PwC, part of the deals practice. So I help companies with acquisitions, divestitures, access to the capital markets. So I'm curious, Neil, what you see in the next 12 to 18 months from an interest rate perspective and how you think that's going to affect companies from a deals and a capital markets perspective.
Well, why don't you tell me what's going to happen with tariffs and with tariff inflation, and then I'll
this.
tell you what
I
happens
love this guy
with inflation.
For who he is.
I mean, I have every reason to believe, I'm not forecasting a recession, I have every reason to believe that the cooling that we're seeing will probably continue and it'll be somewhat gentle. I would expect, right now, the federal funds rate, our official rate, is running between 4.25 and 4.5%. That's a range that we set. And if you look at the estimates that the Federal Open Market Committee members have put out of what we think the neutral rate is, it's somewhere around 3%. It's highly
What's up, M.
uncertain.
Dewey?
So that suggests that interest rates have some room to come down gently over the next couple of years. That's a reasonable guess, but there are big macro factors, including tariffs, that we still need to watch that will ultimately have an effect on that. Marilyn.
Neil, Marilyn Nelson. Tell us how we keep hearing about our national debt. How does the Fed think about that? And is there anything we should be doing or thinking about it? We don't know how exactly to interface with it. We were warned about it. We've talked a little bit about reserve currency. There's the implication that that impacts that. Help us to think through how we should be thinking of this problem that we're facing.
Well, we pay a lot of attention to this. So the national debt is in the domain of fiscal policy. It's the outcome of the taxing and spending decisions that Congress and the administration have made over decades. So in some sense, it's not the Fed's job, and we don't set interest rates thinking about the national debt, but we pay attention to the national debt because it affects the economy. And so that's what we need to pay attention to. But in terms of the debt, if you look at the forecast, and I think I'm telling you things you already know, if you look at the forecast over the next 30 or 40 years, the debt just goes hyperbolic, almost hyperbolic. And it's driven by the aging of our society and lower fertility rates. So what could you do about it? I mean, this is a challenge for our political system. You either raise revenue, you cut spending. Raising revenue is hard, cutting spending is hard, and or you embrace immigration. Like that's one thing that's out there, that if we got our arms around an immigration system that fed our economy, you could actually adjust those demographic ratios. Right now the ratios are going negative because we're not having children at the same rate that we had in prior generations. you could move the needle on that with immigration. And so I would look to you and other leaders in the room about this is a question for our political system. It is not a question for the Fed. And I'm not saying this because I'm trying to wipe my hands of it. I think it's really important. But it literally is the job of our political system to make these decisions. Is it inflationary? Well, that's another tricky question. You know, at a very simple level, it might not be. If the government raises debt by going to Americans and saying, give us your savings, we're going to take your savings, and we're going to pay you money back in the future, and then the government spends that money, well, you're not spending the money, the government's spending that money. So that by itself is not necessarily inflationary. But that gets complicated when you look at the world economy, and if ultimately we're trying to spend more than we can produce, and if the Fed were to lose its independence and to try to print money to support that spending, that would be inflationary. So I'm confident if the Fed is independent, we can keep inflation in check. But that doesn't mean that the national debt is not going to be an issue 20 years from now or 30 years from now. So those are related but adjacent issues.
Thank you, President Kashkari. Great conversation. I'm Allison Barman with Genesis Works. One of the things I've been concerned about and trying to get my arms around is the reduction in science funding, whether that's to the CDC,
I have the
the
highest
NIH,
short
the Foundation.
in September
What
on
are
this
the,
exchange.
Economic impacts of that over the short term and the long term, and is it
Top ticked it,
how
baby.
big of an impact is that?
I mean, I think over the long term, it's something, if it's not restored or some level of it's not restored, and it might be spending on different things, but over decades, our government funding of basic research has led to our competitive position. It's been a huge contributor, whether it was the space program or the defense program or innovations in healthcare. They've been huge sources of competitive strength for America, for ourselves and relative to the whole world. And so I hope, long term that we are committed to science. It's just critical for our economic competitiveness. And same thing with our university system. I mean, attracting the best and brightest from around the world, investing in them, encouraging them to stay, to be part of our society, to be part of our community, to build companies here. All of that, to me, works together and is kind of the secret sauce of America's competitive edge the last 100 years and hopefully for the next 100 years. So I think it's really important long term. Now, could somebody argue that changes need to be made into what the investments were and how they were being made? Certainly one could make that argument. But I think the government funding of basic research, I think that that's absolutely clear. It's clearly important.
President Kashkari, thank you for being here again. My name is 𝐂𝐡𝐚𝐫𝐭. We're name twins. And I serve in two different hats, and that's what I want to talk about, the employment side of the dual mandate. I consult on the economy. I serve on a public company board and bring some economic knowledge there. I also am the director of the School of Business at a local, little, small, faith-based private university that is known for social mobility, North Central University. What we're seeing is that our students who are reasonably prepared are having a very difficult time procuring employment. In fact, I think the national numbers speak to that, onto the 20 to 24 age demographic, kind of about up 200 basis points or so of unemployment over the last 18 months. How much does the Fed actually consider that, not just in the form of workplace readiness, but also maybe as a proxy to employers not wanting to quite yet make that investment in their 40-year kind of workforce, labor force? How much does that factor into the dual mandate?
I mean,
Thank you.
It's an early signal that we pay attention to of another sign of a softening labor market, because as you said, I said earlier, you tend to see when economic downturns happen, oftentimes Black and brown Americans lose their jobs first, or they get hired last. And you start to see some of these early, new college graduates take longer to find jobs as well. It's another early sign that we're paying attention to and watching carefully. So it matters a lot, and I think the data that you said resonates with what I have seen and anecdotally what I have heard as well.
That resonates.
Going once, going twice.
That's pretty much the end of the meeting, guys. We top ticked the short today live. Literally. Who's here for that? That's pretty wild. And by top ticked, I mean, we probably have the highest short taken in September, because it was the highest point in September so far. I'm not necessarily calling for moon or doom or anything like that. We took it because the chart, the technicals were there. Just the same way we take a lot of trades. We'll follow with that and move my stop down. By the time we stream again, it'll probably be closed. Let's be real. You saw me do it though. That's pretty fire. That's pretty fire. Literally top ticked, like and it was a limit order too. So like we got filled and then the market reversed. The whales were watching. I appreciate you guys tuning in. You know, I'm a Bitcoin guy. The Fed is the inevitable. The Fed is the inevitable, I guess actually best friend of Bitcoin. Because eventually they're just going to print everything into oblivion, hyperinflation, etc. It's already happening. I still like some of the members sometimes. I like the things they say. I really appreciate Kashkari. Some of you guys didn't like him, of course, but every topic he addressed, tariffs, immigration, every time he got thrown one of these curveball questions where it's kind of baiting him into taking a side on something, here's what he did. He said, this is how, this is basically both sides of this coin. You know, to paraphrase with tariffs, he said, the Fed, like the tariffs are more of just a curveball of an idea. They don't know how it's going to play out. Are the price impacts going to be just short term, or are they going to be long term? And he said there's an argument that it would be short term, and there's an argument that it would be long term. He didn't take a definitive stance. He didn't say it's going to be this, it's going to be that. He kind of broke things down and made what sound like simple questions with yes or no answers more in reality, where they're not. They're complex. They have different elements, and that's what he did. He took the questions and he gave us the elements of what was being asked, the different moving parts, and essentially then just said, now you think about it. I like that. I like that kind of discourse. I like that kind of reasoning. I like the way that he spoke about it. I dig it. I dig it. He's apparently like the longest sitting board member, I don't know, president, board member in the Fed. Who knows? Look at this picture also that this picture we froze him on. That's quite a picture. That's fire. Appreciate you guys joining in. We had a good Labor Day. We didn't stream. Hopefully this short gets wrecked, honestly. I just wanted it to go up. If you missed the beginning of the stream, there was some good alpha, some good zoomed out analysis and macro that I think everyone should watch. Until then, I guess until Friday, I'll see you guys. Make sure you have subscribed to the stream. I saw a lot of new people here. Welcome. Jump in the Discord, discord.gg/TomCrown. Best way to keep up with our community. And sign up with BYDFI. You see me trading on these exchange partners. You don't need to give them your personal info. There's no restrictions, no matter where you're from. They don't care. You'll get some big sign-up bonuses, and you help support the stream. So it's good stuff. I love you guys. Quality stream. Thank you for being here, everybody. I will catch you at the latest on Friday. Hopefully, if this short gets liquidated, maybe we'll go live again, or just maybe go live again today. You never know. That's why you got to keep those notifications on. Jump in the stream anytime you see us live, because you know that means business. All right, fam. That's all.